Good evening, friends and ladies and gentlemen. A warm welcome to another session with one of the experts from the industry. As we try to keep innovating our themes, we have tried to get in new concepts, new alignments to our session, and we have thus today invited an expert speaker, Mr. Yogesh Aggarwal, who heads the global research India. And in fact, we have asked him to talk about the auto and the IT industry as sectors. A brief about Yogesh. Yogesh is the head of India Research and covers Indian IT services and auto sectors. He joined HSBC Global Research in September 2008, prior to which he worked as a research analyst at an international investment bank in Mumbai. Yogesh is an MBA from Indian School of Business. I think with the huge experience on both these sectors, it is really important to know how the dynamics and the nuances play on this sector. We have seen the Nifty YTD performance to be around 24%, and if you see the auto sector as a performance was close to around 9.5%. But if you see the IT as a sector had a whooping performance of 42%, which clearly generated a lot of alpha. But really, get invested in such thematic instances, it is really important to understand how these sectors behave and what are the close dynamics associated with it. So let me invite at this point of time Mr. Yogesh Aggarwal to really give us some color on these sectors, both these sectors, and we can have a Q&A session later once he completes his hypothesis and dynamisms on the sector. Probably we will have a session to really cover and know more about what these sectors bring in for us in the future. So without much ado, I would request Yogesh to take over proceedings from here on. Thank you,
Thank you, Karan.
Yogesh. Please go ahead.
Yes, thank you, Karan. Thanks for inviting me, and hello everyone on the call. It's a privilege to talk today with all of you. So, as Karan said, I'm going to talk about IT and auto sector in India, and I must say they are in a totally different positioning right now. While auto is going through the perfect storm we have ever seen, they are going through an EV transition. They are seeing significant impact from commodity price increases. They are going through acute semiconductor shortage, which we have never seen in the past. And obviously, COVID has still not gone, so it's impacted demand in certain pockets for sure, even now. So I guess it's a sector which it's amazing how these companies are still managing, and it's almost credit worthy the way they have managed their profitability in the businesses. But it's a perfect storm, which means that the challenges the sector is seeing and the stock prices of these companies have seen in the recent times may continue in the short while, but there is always a mean reversion in life, right? So obviously, as semiconductor shortage normalizes, as commodity prices stabilize, or who knows, maybe recede at some point, as COVID recedes and demand comes back, and we can talk about various segments of demand separately as well. So things will normalize in life as always, and therefore I think that as the sector comes out of these issues, the reversal could be very sharp as well. We have seen in the past, auto is a cyclical industry, and therefore, while the earnings cut are sharp, the earnings revisions are sharp as well. So I think that's where I would say. Now, IT is totally opposite, as I said. IT is a sector which is going through a really peachy, I would say, times. What happened, the great thing about Indian IT, every disruption globally helps Indian IT. Okay. And I always say, good, bad times are good for Indian IT, because in bad times, people call them to cut cost. And actually, just to step back for the benefit of everyone, almost 95% of the revenues for Indian IT are from outside. Almost 50 to 60% is United States, and around 30% is Europe and UK. So when global companies go through trouble, they call them to cut cost. So it's a good thing when they are in trouble, but when they make money, even then they call them to do more stuff, which is what is happening today. And we'll talk about it. So good times or bad times, they benefit. It's the uncertain time when they struggle. Uncertain times are the ones which are right before an expected global negative event. So people wait for such events, okay, right? So be it a big tax cut or a big regulatory reform or a big interest rate cut regime, so things like that. So I think those are not the times today, and therefore the sector is benefiting hugely. And one of the big themes for the sector is cloud. You guys have all heard about cloud. So what is happening is, as the name suggests, the companies are moving their data, their applications are on cloud. Okay, a typical corporate S&P 500 company has applications in the range of 1,000 to 10,000. So they have thousands of applications, and these are all legacy infrastructure sitting silos of databases, and all this is getting transformed and moved to cloud. Okay, and this is huge effort which Indian IT companies are helping them to achieve. And while that is happening, there is digital spend going on as well, right? So the term which is called industrial 4.0. So factories are putting IoT in their plants, cars are getting more autonomous, more electric, right? Retailers are spending lot more effort and money on e-commerce, on omni-channel commerce. So every industry you see, there is a new what I call from high touch to high tech uh, movement, that journey is going on. And while they do that, they transform their legacy infrastructure as well. The hundreds of data centers, the data silos, the application landscape, everything is moving to cloud. And I think that's the backbone of IT spend buoyancy today. And that is what the sector is benefiting right now. I always hear this, and sometimes it comes in media as well, that automation will kill Indian IT, and people will lose jobs and everything. I think it's um, uh, funnily. I also there was this social media trend that Zomato riders earn more than Infosys engineers, and I think those things are highly unfounded, very unresearched. Indian IT does a lot of cost-driven work, but they do a lot of strategic work as well. Thousands and thousands of engineers work with global large banks across the world, and they are the backbone for these banks, these retailers today. And I think to say that automation will kill this work is a bit unfounded, and therefore I don't worry about that at all. And to some extent, automation can only impact stuff which is repeatable, as the definition suggests for automation. And in IT services, especially larger companies, there is a lot of landscape is customized. It's not off the shelf, and therefore to automate customized software, a custom software is lot more is almost impossible. So I don't worry about those things at all. I think IT has been it's been the biggest thing which has happened to India in the last 30 years since the industrial opening up. It employs around 4.5 million people directly, and almost 15 million people indirectly. And I think this is the single biggest employment creator in the last 20 years. Just anecdotally, we were looking at, if you just look at BSC 100 companies, almost 60% of the incremental employment in the last 15 years has come from IT companies. And I think that's hugely credit worthy. Their cash flows continue to be robust. Their ROEs are 30 to 40%. Their corporate governance is top notch, and all of them give dividends as well. While I do hope at some point their R&D spend goes up, which is still lagging, but I guess that's their business model. Now that's where we are. Although the thing with IT is, unlike autos, the buoyancy is visible in stock prices. The valuations are all-time high. Today, the sector is trading at 50% higher valuations than 5-year average. So that's always a challenge in the near term, but it's a great sector nevertheless. TCS today is $200 billion almost market cap. Infosys is $100 billion. So these companies are huge, and they will always be core part of the portfolio for Indian fund managers. So I'll take a pause here, Karun. I mean, we can get into Q&A, or is there something specific I can pick up on autos and we can move? You're on mute, Karun.
Sorry. Sorry, my apologies. Thank you so much, Yogesh. I think that was really a wonderful brief at this point of time. Let's start with some of the basic things. I think on the auto industry, I mean, to start
Yeah.
with, EV seems to be the buzzing word in the auto industry. And today, it's inevitably, it seems the industry is in a long-term transition to greener fuel, either through
Yes.
electrification or through use of biofuels. I
Yeah.
think methanol or ethanol, and probably the latest buzzword is the hydrogen fuel cells to achieve the
Yeah.
greener path.
Yeah.
How early and effective do you visualize the transition to take place?
Yeah. So, Karun, absolutely, this is a burning issue. In fact, in 2019, we came out with a big report on EVs. While it's we appreciate the efforts government is making in pushing. There are huge incentives today on electric vehicles in India, but I think we were quite apprehensive on the EV policy of India, and we made a few presentations as well wherever we could. The challenge in India is one, on an average, Indian car is one third the size of China or US, or actually even smaller in bill of material terms. To electrify a smaller car is lot more challenging than a bigger car. Okay, because end of the day, the battery and motor cost doesn't increase as significantly in a bigger versus a smaller car. And to provide a reasonable range and power, the smaller cars become lot more expensive. Okay, that is one. Secondly, we don't have a reliable grid today, power grid. Okay. Just fundamentally, if you see, if I have today a Tata Nexon, let's say, and it has a 30 kilowatt hour battery, and if I am charging in a fast charger, let's say in 2 hours, it's practically running 50 one-ton air conditioning at home. And you can imagine if a building has 300-400 flats and there are a lot more EVs, the stress on the grid will be a lot. Okay, so while we are looking to ramp up EVs, I think a lot of investment has to first go into upgrading the electric grid, local transformers. We need smart grids. We need a lots of infrastructure upgrades, and we also need power going back to the grid. Those kind of facilities which we have in certain cities in India today. So that was the second challenge. Thirdly, fundamentally, look, the idea is to reduce pollution, right? But we do generate electricity from coal. Okay, so at the from well to pipe kind of emissions, it doesn't reduce significantly. Also, the dumping of batteries eventually, and and while we will reduce the import of petroleum because we will not use petrol or diesel, let's say, but the batteries are 100% imported today in India, and the biggest chemistry, as you know, is lithium ion battery, which is controlled a lot the by few countries in the east, and that would increase India's reliance versus Middle East to the east, which I don't think geopolitically would make huge sense as well. Now, the good thing is chemistries are evolving. There is sodium ion chemistry coming. Hopefully, at some day, hydrogen will come, and I think hydrogen is eventually the answer to clean energy. But there are all these challenges which are still there, and I personally think public charging infrastructure is a hell of a task in India because finding space uh, in a fuel station for charging will be not easy, and however fast it is, it's not going to be more than less than 10-20 minutes for some charging, which is a lot of time. We personally think CNG is a great solution in the near term in terms of reducing in terms of reducing emissions, but EVs will take time. There is some pickup we are seeing in PV, especially Tata, MG. Some of those PVs are selling, but it's still, although last month was pretty decent, around 1100 sales a month in the month, but usually we are stuck at 600 cars a month, which versus 3 lakh cars we sell a month in India. So it's still very, very early. In two wheelers, obviously Ola has made a huge noise around two wheelers, and the specifications are pretty solid. But one could empathize that a lot of a lot of those specs are coming at the pretext of big scale, right, and localization. So it's kind of a self fulfilling thing. If you have scale, then you reduce cost, but you reduce cost only when you have scale. So I think the whole strategy of Ola is to bring scale, which will help you localize, which will help you reduce cost, and that will further create scale. And I think that's we'll see how it goes. There are lots of startups in EVs, particularly Ether and Ola in particular, but there are tons of them. But yes, the challenges are still there. We still need to work on battery technology, and therefore it will take time for EVs to pick up in India.
Sure, I guess I believe that sustainability also is a key issue, and that is where the batteries are still being pushed on because finally you will have to dump those batteries. One more thing, the biggest concern for auto industry seems to be rising commodity prices, which you really touched upon at the beginning of your talk. While the consumerism is at trough during the pandemic, how do you foresee the industry bracing the challenge of the rising commodity prices, particularly with
Yeah.
respect to the auto industry?
Yeah, so Karun, it's a big challenge, and I don't think anyone has seen that kind of commodity price hikes in ages, right? And it's not normal commodities. The commodities of special metals have gone up quite a lot, and
Hmm.
those metals, the 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 usage of those metals like palladium has gone up after BS6 vehicles in the catalytic converters, etc. And those prices have doubled or tripled as such. So in all, and you'll be shocked with this number. We think that for, let's say, cars companies, the total headwind is almost 800 basis points on profitability. I mean, they hardly used to make that kind of margin. So actually, if they don't pass on, the entire profits are gone. Like they go to zero. They are passing on gradually, though. There is lack of confidence, obviously, on consumer demand, but the car demand has come back quite nicely. Actually, across segments, car demand has come back very, very sharply. Some of it is helped by people preferring personal mobility over shared mobility. But our feel is that's largely a lot of pent up demand because the auto sales today is at 10-year low. Okay, and it's a pity for the size of India. I mean, we were at 30 cars per 1,000 people 10 years back, and everyone thought we will see a phenomenal growth in car industry in India. We have seen that in China, Korea, Japan, US in the past. I mean, that is considered an inflection point, but it's been 10 years. We are at almost 10 year low volumes. So there is certainly pent up demand out there, which we are seeing. But yes, the commodity prices are impacting profitability. So far, we have seen around 4 to 5% increase in prices by auto OEMs. And the good thing is, since there is shortage of vehicles because of semiconductors, they are okay to take that kind of price hike, and discounts are also not there. But yeah, maybe another 3-4% is yet to come to compensate the full commodity price hikes.
Sure. Yogesh, the typically cost efficiencies can only be achieved through higher production and scalable business models. I'm talking particularly with respect to the EVs and looking at India auto demand, where penetration seems to be quite much lower than most of the developed nations. Do you believe a viable infrastructure can be created to power sustainable EVs growth model?
Yeah, Karan, actually, I touched upon that. I don't think that public charging can easily be developed in India. I think the cost dynamics of real estate, the putting up the local grid will be very challenging, and the ability to price in India electricity. So I think for the foreseeable future, it will be home charging, office charging, and mall charging. I think the government will give higher and higher incentives, and I think it just came today that in Mumbai, or is it Maharashtra, they are reducing property tax by 2% if you have a charger in your building. And I think that's the solution. That's a great way to go, especially in Mumbai or Delhi or Gurgaon, where people are living in high rises. It's not that difficult for charging to be developed, to be set up in the building parkings. And I think that's the way to go. So initially for few years you develop that, then you develop the malls, then you develop offices, and I think that will go a long way for some time. Bear in mind, EVs is an interesting word, right? Everyone worries about range anxiety. Today, we have in our cars, whatever is available, we have 30 kilowatt hour battery, which gives us a range of 120 kilometers, give or take, right? Now, that is good enough range for city driving, but that also means if you are in Mumbai, you will not ever go to Pune as well in an EV, right? Because you'll be worried for that. So I think theoretically we are still going to see increase in battery sizes in India, from 30 to 40 kilowatt hour, and also that would mean the range will go up to 200 to 250 kilometers, and I think that is pretty sustainable. Globally the range is up to 500 kilometers, but I think in India 250-kilometer range will be viable from a cost benefit perspective. But what can also happen is people will buy EVs as a second car. So I may have one car for a long haul whenever I need, but for city drive, I mean, to go to our offices, I don't think any one of us will use more than 870, 80 kilometers as well. And I think that's where the usage will pick up initially, and that charging therefore has to happen in office or in buildings. And I think that's what another thing is, the government, the or the buildings or the SCBs also will have to put smart chargers which charges at off peak hours. I think that will be very critical as the mass builds up. These cars have to be charged at 1 a.m. or 4 a.m. when the electricity usage is the minimum. And I think that's the those kind of solutions have to come up as well to make it better for the overall ecosystem perspective. So yeah.
Sure, Yogesh. Yogesh, I think you talked about it a little bit in terms of the incentives to be provided. But in all total, how does the government incline to promote the new phase of the industry? And largely looking at the high cost of EVs, it's only initial subsidies at this point of time, and some incentives probably to the manufacturers. Is that going to drive both the consumer and the manufacturer? Your thoughts?
Well, I think the government Tarun is already offering a lot. Uh, I mean, the GST is significantly lower on the cars, and also there is fame benefit as well, significant fame benefit, fame benefit. I mean, actually, for a two-wheeler, the government incentive, they go up to almost, I mean, just a ballpark. they go up to for a 3 kilowatt hour battery, go up to almost 45,000 rupees. It's huge, the benefit government is giving. Although on the other side, if volumes start to pick up, I think government will be very worried because they make tons of money on. I mean, the taxes in India on automobile are the highest globally. A car which is sold for 10 lakh rupees is the bill of material probably is, yeah, maybe 5 lakh rupees or less, so the taxes in India are just huge. And I think that kind of revenue loss will start to pinch the government at some point. So I think initially they are offering all these incentives, but they will moderate. And to be fair, we have seen globally incentives to be very big initially, and then they moderate with time. But today, if you ask me, are they doing enough? I think that's the best the Indian government could do. Although the approach, I still wonder is right, because the incentives are great, but I think R&D is important to be established in India. But that, I think the companies have to invest more in R&D and building their own expertise on batteries and things like that. But from a government perspective, I think they're doing enough.
Sure. You did touch upon the greener fuels, and CNG as an emission-friendly gas is fast picking up as an alternative fuel. Will this
Hmm.
hamper the growth that has been envisaged for the EV segment?
So sorry, Karun, say that again.
Sorry, no. What I'm wanting to know is CNG is emerging as a greener fuel.
Yeah,
So will that
yeah.
envisage the growth of the EV segment? We're looking at the flip side of cost sustainability attached to the infrastructure, of course, with respect to the electric vehicles.
Well, I think CNG is a stopgap arrangement to some extent, and a good alternative. You have to understand the limitations of CNG as well, right? CNG is much cleaner than diesel or petrol, but then CNG, you put a big kit, a big cylinder at the boot, right? So it takes away the space. Secondly, although OEMs claim that the driving efficiency doesn't get impacted, but then it goes rider to rider, that may impact as well. And then the range reduces. I mean, ultimately CNG tank has a certain range, and then it goes to the petrol engine, so it's a double cost, right, end of the day. So and then CNG in India is still, although available in many cities, and it's going to expand significantly, but there is still always waiting. It takes time to fill it, and therefore it's not something you will enjoy at the petrol pumps, right? So our belief is, for CNG will be good, but it will be viable or attractive to certain type of cars and users. Okay,
Hmm.
we have seen huge traction in Wagoner, in Ertiga, in Desire. So certain cars have seen a huge acceptance. But if you ask me today, tomorrow, will a Creta or a Safari CNG will sell? If it was there, I doubt it. I think the customer profile will be different, the expectations, the requirements, everything is different. So although we still think CNG will continue to grow well as there is better supply, better models and all, but I think the limitations will still be there. So I don't think it is as such cannibalizing EVs, but yeah, it'll sit somewhere in the middle for some time.
So, I mean, just extending the question to hydrogen fuel cell, I know it is more of an EV with a clean gas. Do you think also the storage cost will really impact, or the production cost will impact for the hydrogen fuel cells as well towards the transition?
Yeah, so that's the hope. There are some pilots and some commercial deployment of hydrogen in large commercial vehicles in Europe. So there is some acceptance. There is some work already going on. But I think hydrogen will take time because the cost economics of hydrogen, the chemistry which goes behind is still is not is way behind in terms of making it commercially viable for passenger cars or any kind of passenger vehicle. So I mean, it is eventually probably the solution, but we are still some time away.
Sure. When we talk of the EVs, and we clearly think of the number of engine parts that are going to reduce, but that has a flip side, because that has to have an impact on the auto ancillary industries subscribing to the internal combustion engine demand. Isn't that a bigger risk for the industry, as we see the number of movable components reducing drastically towards the transition to the EV?
Yeah, Karun, that's a great question. I think, look, it is evolution in every industry in some sense, right? I mean, if you remember 20 years back, we used to go to STD PCOs to make a long haul call, right? There used to be STDs everywhere, right? Everywhere. Today, there are none, right? But those people have probably been deployed in fixing mobile phones. Today, we have mobile phones everywhere, selling, fixing, selling accessories to the phone. So I think it's true. It's an evolution. So obviously it will need investment and skill upgrades. Okay, and which is what the point I was making in the case of Indian IT also. The type of work may be changing every day, but they can do it if they keep on reskilling. And I think that's true for auto industry as well. So absolutely, the number of parts go down. So if you are an OEM which is uh, making an engine part, then obviously you are at a big risk, right? Because engines will not be used in future. Or if you are making a lead acid battery and there is no way you are looking to move to the to a lithium ion battery and all. Although there is always a surplus lead acid battery as well in EV. But so it depends on which part of the value chain you are, but then it's up to you, up to the OEM, how to the supplier, how he upgrades to other components. Bear in mind, a lot of electrical components go into an EV, so you have to develop electric capabilities. A lot of motor companies are coming in India, controller companies, battery packaging companies can come. Then even the wiring harness goes up significantly. The value of wiring harness in the car. In fact, even the tires have to be different because the EVs have huge acceleration. The tires need some upgrades as well. So I guess to some extent you are right, and I worry about that from an Indian perspective because we are a big hub for auto components. But it is, which is why I said we need to develop expertise in batteries and motors and do a lot of R&D to maintain that competitive edge. But I think the companies are smart and they know all this, and they will be and they are investing to build those
Yep,
capabilities.
sure. Yogesh, recently there was a lot of talk of the semiconductor chip shortages, and you alluded in your opening remarks. No, it looks like it's plaguing to be a major showstopper for the industry. How is the challenge being addressed, and is it likely to demoralize the sectoral growth?
Well, it is a challenge, and let's step back and see why it happened. Okay, and by the way, I must admit I don't have a clear answer when it will get solved. But why it happened is important to understand. During COVID, post COVID, so all these auto companies buy semiconductors from almost the same companies which give semiconductors to phone manufacturer or telecom equipment manufacturer or a laptop manufacturer, right? And what happened after COVID is huge surge in demand. I mean, all of us have bought more laptops, more phones post COVID. So a lot of demand cornered the semiconductor from the industry. And also, importantly, semiconductors for autos are low margins for semi companies. So they always prefer selling to non-auto companies. So that therefore and secondly, auto companies are always just in time. I mean, that's the efficiencies which have developed over 100 years. So during COVID, they refrained from giving long-term orders. So they lost out on the supply to other industries, and therefore it became a self-fulfilling problem because while the demand was growing, they didn't give orders, and the other industries cornered all the demand. And structurally, there was some structural increase in demand as well because incrementally cars need more semiconductors, right? Electric vehicles need more semis. the autonomous vehicles, the infotainment, everything needs more semiconductor. Globally, 5G is picking up. 5G phones, 5G equipment needs more semiconductor. IoT needs more semiconductor. So I think there was a structural rise in demand for semis as well. So there was a cyclical surge, there was a structural surge, and on top of everything, autos were not proactive or brave enough to give orders in the peak of lockdown. And then there were some incidents as well. There was fire in one of the plants in the east, and then very recently ASEAN countries have been under lockdown because of COVID, and that has seriously impacted the supply as well. So all those things are adding up. Our feel is that it will start to normal as ASEAN countries, Thailand and all come up, or Malaysia, they come out of COVID. Some bit of normalization should happen, but most companies are saying it may get normal maybe only by next year, middle or end of next year. So nobody has a clear answer, but our feeling is at least post COVID in Malaysia, we should start to get a little better from November.
Sure. I think we've talked a lot about auto. Now let's move on to the IT. Yogesh, what are the lead indicators for the growth in the Indian IT sector, particularly?
Yeah, it's a tough one, Karan, because it's a B2B sector, so it's always tough to. I mean, unlike autos, we go to a dealer and figure out whether a car is selling or not. In in IT, it's always a challenge. A typical company, let's say Infosys, TCS, or Wipro, they work with they work with over 1,000 customers. Okay, so practically every S&P 500 company and large corporate will be customer for these guys. And at any point, they are running 10,000 projects. Okay, so it's always a challenge to figure out the demand as such. But two data points I leave. One is the cloud growth. So Amazon Web Services or Microsoft or Google, the three large hyperscalers we call, their growth is a good leading indicator. And then secondly, the revenue and the earnings growth for S&P 500 companies. So typically, if a bank makes more money, they will spend more money, because there is one, we have to understand, there is an inherent need to spend more in tech. So if you tell our chief technology officer that you have unlimited budget, he will double, triple the budgets today. He has areas to spend. Okay.
Mm.
It's only the budgets which are constraining today. And the budgets increase as the banks or retailers or manufacturing companies make more money. And I think therefore it's important to track the financial health of these customers and in the US. So basically, one can track S&P 500 companies and the cloud companies. Those two will give a credible uh, idea, demand. I forgot to mention one thing. One is the demand, the other is the supply. We are seeing uh, in in my uh, 20 years, this is we have seen cycles of wage inflation. I mean, after subprime crisis, we saw a big tech wave and wages went up. But the wage inflation we are seeing last 1 year is just phenomenal. The number of openings are in thousands. The wage inflation is 30, 40, 50% if people have skills. So it's a good thing which is happening, to be honest. People are finally making more money, and that's another thing to highlight. I thought I missed that.
Yeah, sure. I think the wage inflation is very nascent in the banking industry. So, I
Yeah,
mean, it's good to see.
it's a good time to be a techie, I must say, but
Yes, yes, sure. Yogesh, you touched upon the cloud growth, and that seems to be the top driver for the incremental IT spend. As we see globally, hyperscalers reporting strong growth in their revenues in Q2 21, particularly supported by the continued optimism in the IT demand. How is the Indian IT space capitalizing on the opportunity?
well, yeah, Karun, I think it's very, as I said, they are highly integrated. Okay, so if let's step back and understand, if a bank has uh, if a bank has their trading, I shouldn't say trading system. So let's say a bank is doing a regulatory reporting. Okay, or we have tons of reporting, right, on a daily basis, and those reportings are run on local servers, and there is a certain amount of effort which goes behind it. The Those applications are getting moved to cloud, and clouds provide that fungibility of resources, the scalability, which is never one can never achieve on a on-premise IT infrastructure, and that is driving the growth for hyperscalers, what you said. But to make the transition, that migration, that modernization, you need somebody to do that for you, and that's where the help from IT industry comes through. And then there is always the data part as well, the analytics, the data science, the data intelligence. So there is hand holding needed at every stage, and that's what is the role for Indian IT.
In fact, so it's a long chain reaction that goes in, and that is where the Indian ITs can play a very important role. Sure.
Exactly.
Yeah. What are the kind of synergies? Now, you talked about IT, you talked about auto. What are the kind of synergies that are being envisaged between the auto and the IT, given the sector, given the sectoral landscape is changing, and how do we see the future of mobility?
It's a very interesting topic, Karun. I My favorite anecdote is I think 40% of the Tesla analysts are tech analysts today, right? And so there is obviously huge synergies. Uh, I mean, companies without naming globally in the West are create auto companies are making their own operating system today for cars. I mean, to that extent, software capabilities have to be developed today, and this is a full stack application software capabilities which have to be developed. So our assumption is, our estimate is, in 10 years 20% of the value of the car will be software. Okay, and you will have uh, so like in your chair there is an electronic control unit which moves your car up and down. There is a ECU in your electronic brake. There is ECU in your infotainment. In future there will be one CPU like a laptop, and everything else will be commoditized hardware, and that software is will be the heart of the car, and that software will be updated real time. We call it OTA, over the air updates. So while you are driving, the new songs will be updated automatically. The new features will come automatically. And I think for cars, software will be the heart of it. And part of it is also autonomous features, right? Autonomous features need Ultimately, autonomous features will be developed on data, and data can be captured only when your car has software and IoT and sensors and everything. And I think it's the full ecosystem, software ecosystem, which will get developed. And auto companies are doing it on their own, or with the help of the ecosystem. But huge investments going into software today by auto OEMs.
Sure. The US contributes almost 50 to 70% of the revenues for Indian IT sector. You touched upon it earlier, and the tech spend for the US is a lot driven by the financial situation of the customers. Given the fact that US itself is going through the tough times, do you believe a significant impact on Indian IT industry?
Well, Karun, we are seeing actually the S&P 500 companies actually seeing a significant traction in their businesses. Actually, most of the companies are doing better than expected. If you track their revenue revisions, earnings revisions, it's only been positive. But yes, that is the one risk. If tomorrow they start to see a dip in their performance, it will impact tech spend. But today, it's not the case. I think they're all doing very well, and that's all feeding into the spend by them.
Sure. Uh, the finance or BFSI is a major sector wherein the IT industry caters to. Major US banks continue to indicate an urgency to invest in the new transformation initiatives as digital engagement across product offerings. Do you believe this will continue to depict the growth prospects for the Indian IT companies? Because if you talk of digitalization, probably if you look at the Nasdaq or the global indices, like for example, 27% of the companies in the market cap constitute of the digitalization companies, and in India it is just maybe less than 1%. So do you see a big space emerging for digital companies in India?
Okay, so it's a bit different than IT industry. What you are asking
Yes,
me is the startup ecosystem and the overall digital economy growing in India. So
very true.
definitely, Karun. So okay. So I will divide the overall the overall marketed to one is the fintech and the second is the consumer tech, right? So I won't talk about fintech; it's just evolving, and I'm not an expert there. But consumer tech is already seeing huge traction, right? We have all seen Zomato market cap almost 13, $14 billion today, and there is huge exuberance around the new tech space. And I think people worry about their losses and all, which is a worry, but it's an early stage. The whole fundamental idea of these companies is to change behavior, okay? And behaviors change in not 2, 3 years, but in 10, 20 years. So I think the street and the investors are taking that call, long-term call on change in behavior. For instance, in food delivery, you and me may still be not ordering enough at that frequency, but maybe our kids will be okay to order daily or 3 times a week. And I think those kind of behavioral changes are what they are working with, and that is true across the board. But to be honest, there is a lot of look, tech can be vitamin or tech can be a painkiller, right? So either way they do well in the long term. And somebody like e-commerce like a Amazon or a Flipkart has been a painkiller as well, especially during COVID. So I think those industries have seen a big foot in terms of standing, and I think that growth is going to continue. Some of the customer behavior may reverse a little bit here and there, but I mean, think about it. Cash on delivery. I'll give you an anecdote. Cash on delivery fell after demon expectedly, but went right back in few months at the same level. This is the first time it has, although it's still very high, but it's fallen a little bit after COVID, because this time the impact is a lot more profound. So I think that's overall it's a great employment generator as well. Overall, it's attracted huge capital flows in India. Uh, I think last year we got 10 billion flows. This year, just from January to June, there was 10 billion, and I think July itself was $10 billion. So the money is coming to India, and that's always a good thing.
Sure. I think let this be the last one. Yogesh, we actually, in the opening remarks, I did mention about the IT exuberance that we have already seen and a whooping 42% return on the IT index by year till date. But we haven't seen a similar performance on the auto segment. Of course, we are aware that pandemic was one of the main issues. But then, do you believe post the pent up demand is being met, we'll see a long term sustainable future for the auto industry?
Oh yeah, I opened with that, Karun. I think it's a perfect storm for the industry, right? And things never remain bad. And these are great companies again in terms of financial management, return ratios, corporate governance. Everything is extraordinary. As an investor, but the only thing is you need to show patience. I mean, this you these days stocks go up like there is it's tough to fundamentally justify. And if someone is buying for 3 months, it will be a challenge because we are still in the middle of crisis in terms of semi shortage, commodity prices, COVID. I mean, think about it. Colleges, schools are not open. They itself are 20% of the demand for two-wheelers, right? So I think they're great value, but they need patience. So somebody with a patience, with at least couple of years of view, I think that's a sector to be.
Yeah, absolutely. You well said it, Yogesh. I think patience is the ball game for all the markets. In fact, it for all asset classes, and we have seen compounding returns that the markets have given for people who have waited patiently for years. That's it, Yogesh. Thank you so much for your expert views on the IT and the auto industry, and we look forward for having with you more of such sessions. It was really exciting and enriching sessions with you. Thank you
Well,
so
lovely
much,
to
Yogesh.
be there, Karan. Thank you so much for inviting again. Thank you.
Thank you, Yogesh. This concludes the session for the day.